happy to be here at the TSX with you, launching the 3 new Humilis products. We're very, very happy about the partnership as well. And we're very happy to bring Brian Belsky back to Canada, launch these 3 new ETFs here on the TSX, one of which is going to have the 2 mutual fund series, which is going to be coming out very soon.
We have a lot of conviction on how we think about investing, always have, and our great partnership with LongPoint's afforded us an opportunity to show that conviction to the Canadian marketplace.
Can you tell us a little bit about who Brian Belsky is for the people that don't know you, who haven't been watching TV for the last 30 years in Canada?
Wow, so 30 years. Well, the very first time I did television, it was about 30 years ago. And it's so amazing. You don't know the reach that you have with people. And when you sit down in this business and you're just doing your job, and I could be walking around Bloor Street or walking down King Street or whatever, and people come up and say, "Are you Brian Belsky?" And it's so humbling because, yes, I am. And the first thing I say is, well, the things that I'm saying on television, are they helping you? Are you feeling good about your portfolio? Because we're known as bulls. We're known as being positive. There's always something to be positive about. There's always stocks to buy, whether or not it's negative or positive, the trends in the market. And you have to have faith. And faith in this business, Steve, is fundamentals.
You recently left a large Canadian bank, which you'd been at for quite a while, and you started Humilis.
The strategy behind Humilis is exactly the same way we've run money now for over 20 years in the public marketplace at various different firms. And yes, we are at an amazing Canadian institution for 13 and a half years. And we've met a lot of great people and had great relationships. But this business, at the end of the day, is about relationships. And we're going to carry over those relationships that we've made through all of these years into Humilis. Humilis means humble. In this business, the minute that you think you know everything, this is when the business tells you you don't know everything. I'm never the smartest person in the room. And so I learned from all these relationships I've encountered, and it's made us build this firm called Humilis to remain humble and invest with conviction.
Tell us a little bit about what goes into investing with humility and conviction. Because I've never ever heard that really, other than you talk about it. Nobody else talks about that type of sort of core strategy.
So if I walk into, let's say, XYZ company in New York City, and I'm talking to the large cap growth portfolio manager. This large cap growth portfolio manager, Steve, owns 150 to 200 stocks. That to me is not convicted, right? They're trying to play around, trying to beat the market with 200 stocks. Well, I'm not going to know everything about 200 stocks, but I can know a fair amount about 30 to 50 stocks. We found that 50 stocks is kind of the magic number in terms of being convicted and being concentrated in a portfolio. So 50 stocks is our magic number for large cap money. And for small to mid cap money, it's kind of 60 to 75. But we feel really comfortable that we can feel very good about the fundamental condition of 50 stocks. And so I don't know anybody that has a 12 or 18 month runtime on 200 stocks, but we can have conviction on 50 stocks.
We launched 3 ETFs on the TSX. All of them have very similar long equity strategies. We're not doing any shorting really. We got your highly convicted portfolios with the names that you're very fundamentally drawn with. We have the HBTA, which is also going to have the 2 mutual fund series, which are going to be launching very soon. Break down for us the differences between the different portfolios, how you're going to differentiate the strategies.
So focus on one word each, okay? So for the fundamental opportunities, we're going to have the majority of companies in Canada and then layer in the best companies in the United States. Remember the United States index and the way that the market is put together, it's much more diversified. In Canada, we have fantastic banks and gold companies and energy companies, but people forget that there's amazing brands here in Canada. And we've said for a long time that Canada is one of the best stock picking markets in the world. So we've kind of layered in that thought into owning the best opportunities on a fundamental basis and then layer in the best of the US. Then think dividend for the next one. Dividend growth is an important, not just buying companies because they pay a high yield, Steve, but because they are growing the dividend over time. And key metric that we look at is these companies must have free cash flow yields above the dividend yield, because at the end of the day, we want to make sure they can continue to pay the dividend. Then finally, the tactical. Now, tactical's been around in a former life. That former life came to me and said, okay, we know that you like fundamental opportunities, Brian, but what's the real Belsky buy list? What's the best opportunity or vehicle to best exemplify what Belsky thinks? Well, what Belsky thinks is if you take a look at the North American market, We think you should be 75% US, 25% Canada on a tactical basis. Now, the great thing is we can move that around, but longer term, our back testing and exhaustive analysis said 75% US, 25% Canada. And so that's the way that particular tactical is put together. 75% of the best companies in the United States layer in with the very, very, very best of Canada. You've seen that over time, the US does outperform, but we've had these cyclical natures where Canada outperformed, including last year for obvious reasons. But typically and historically, that doesn't last. So from a longer term perspective, we always think longer term, even though it's tactical. You can think longer term and be tactically, not like a day or a week or a month. We're talking several quarters where the US is positioned to outperform.
In your previous life, before Humilis, you were managing a mutual fund for somebody and you're managing over $2 billion in assets using your tactical opportunities strategy kind of thing. Now we've launched HBTA. It's an ETF. It's available to every investor in Canada who wants to buy it. Self-directed, retail, doesn't really matter for us. We're happy to have Brian Belsky managing the money for them. But we wanted to give an opportunity to all investors in Canada. So as part of that, you really wanted just to bring a mutual fund strategy that advisors who used to use you. So today we're going to be launching as part of HBTA, the Series A and the Series F class. So the fund serve codes for these, for the people to understand it, is LPT 101 for the Series A and then LPT 501 for the Series F. Can you really tell us, how do you want to sort of go after the mutual fund market and really raise money and try and, for all those investors who thought that Brian Belsky was still managing their money in an old mutual fund and isn't really doing that anymore. And now we have this new product here in Canada. It's going to be available to all investors.
Well, here's the greatest thing about HBTA. It's available to all of Canada. In my prior arrangement, why people were so excited about having a mutual fund is that anybody in Canada could buy that. So it wasn't just the particular company that I was working for. You had to have an account with that company. That's how you can invest with Belsky. And we're now opening that up again, HBTA, for everybody in Canada. That's number one. These advisors, but especially the clients, hung with us for over a decade in this mutual fund. And so that's why we're so excited. So that's why I just love talking about being back in Canada. It's not about Belsky being back in Canada. It's about the opportunity for these amazing clients to take part in what we've done for them over the last decade. It's exactly the same, managed money exactly the same way, positions by and large are exactly the same. Because why? Because we are consistent. We don't want to try to outsmart ourselves, Steve. We do what we do, and we've always done it the same way. We're not going to change.
Well, one of the best things that you've been known for in your entire career, especially managing money for one of the banks, is connecting with clients and understanding what the client wants and giving the client the information that they need to.
I think you have to tell stories and talk about why you buy something, why you've held something, what you feel about things. And I think that's really what the majority of people in our business miss out. They try to prove how smart they are.
Why did we launch the Humilis ETFs under the LongPoint Partnership Platform?
The word there is partnership. And so when you work for the man, quote unquote, and I work for the man, the good thing is you don't have to worry about, things like the bull market and compliance that's happened the last 20 years in this business, or paperwork and all this kind of stuff. The bad thing is they kind of control on how you think and what you do. And so when you branch off into your own, you're really relishing on, I can do what I want to do, but then you forget about all this other stuff. And so for the partnership in LongPoint has been so amazing that has covered us on that, like literally covered us. That's where the relationship has meant the most. You've made it so easy, so seamless, no bureaucracy, no drama, no over-the-top worries about things. This business is an amazing business, financial services. No matter how much the big people like to screw it up over time, and I've been through many of these screw-ups through the credit crisis and the bear markets of the 90s and all this kind of stuff, is that this is about relationship. And at the end of the day, we're super excited about this relationship with LongPoint.
Well, thank you again, Brian, for being here today.
Yes.
We're just excited about the future.
Thank you.